Yeah, start over again. Okay, call this audit committee meeting to order and wish to acknowledge that we connect with many First Nations communities across our vast regional district. And today we are located on the Thompson-Nicola territory, situated within the unceded ancestral lands of the Secwepemc Nation. The TNRD appreciates the partnership that we have with the Secwepemc and respect the territory and the land in which we are gathered today. First item, I guess, maybe that's, is someone else going to run the election for chair?
Thank you, Chair Rain. Yes, I will do that. So nominations will be called 3 times. As candidates are nominated, they will be asked if they consent to the nomination, and then nominations will be closed. If there's only one consenting candidate, that candidate will be acclaimed as chair. I will now call for nominations for the position of chair of the audit committee. First call for nominations for the office of chair. Chairperson or Director Christian?
I nominate Director Rain.
Director Rain, do you consent?
Yes.
Thank you. Second call for nominations for the office of chair. Third and final call for nominations for the office of chair. I declare the nominations closed for the office of chair. Director Rain is acclaimed to the office of chair.
Thank you. And you wish to continue, or I should continue?
I can continue. If
Yeah,
you'd like,
go ahead. Yeah.
So nominations will now be called for the office of vice chair. First call for nominations for the office of vice chair. Director Christian?
I nominate Director Quinn.
Director Quinn, do you consent? Thank you. Yes. Second call for nominations for the office of vice chair. Third and final call for nominations for the office of vice chair. I declare the nominations closed for the office of vice chair. Director Quinn is acclaimed to the office of vice chair for the audit committee.
Thank you. First item business, the approval of the minutes from March 10th, 2021. Second, call the all in favor? No one opposed. Motion is carried. And then the second item, the December 16th, 2021 audit committee minutes. Thank you. Anybody, all in favor? No one opposed. The motion is carried. And then reports 2021 audit planning report, and this will be a verbal report by KPMG. Thank you.
Thank you, Director Rain. I'm going to walk through the 2021 audit plan, as it's that time of year again, and this is an opportunity for the audit committee to have any input into the audit plan for the current year, as we are now just a few weeks away from beginning our 2021 financial statement audit. I point you to the document that I handed out, and I'll hit some of the highlights throughout the report. And first of all, on an overview, basically, our audit plan will go through any updates from the prior year to our plan. We'll talk briefly about the financial reporting implications of COVID-19 on the statements. Go through our audit risks that we've identified for the current year, materiality that we set for the financial statements for both the regional district and the hospital district. Talk about quality control in our audit, our fees, and any current developments that may impact the financial statements for the district for 2021 and future years. First of all, updates to our audit plan for the current year. The most significant change would be the forensic report that was recently released by BDO, and what our response to that is going to be for the current year financial statement audit. First of all, we will review the findings of the report in depth, determine any implications on the current and prior year financial statement audits, which could include things like perhaps interviewing individuals outside of the finance department, carrying out additional audit procedures, increasing our sample size and testing around certain areas of the financial statements. We've also responding to the risks by adding additional partner to the engagement. So we've got an engagement quality control review partner added to the engagement. And also we've got a couple members of our forensic investigation team to review the report and provide guidance in terms of our audit for the current year. We've also reduced our materiality for the current year in terms of our percentage of benchmark. And we will modify certain audit procedures from where we might have done, let's call it substantive analytical procedures, where we're looking at getting explanations and supporting documents for change in balances to more sampling expenses and revenues and using larger sample sizes than we have in the past. That's probably the most significant change. Page 4 of the document, again, COVID-19 continues to be present and obviously is impacting organizations in different ways. We'll look at the assessment made by management and any implications of COVID-19 on financial reporting. And there'll likely be a note to the financial statements again for 2021. And that will include looking at, whether there's been any impact in the current year on operations and what potential uncertainty there is over future cash flows or any impacts on assets or liabilities of the organization. Also for us, in terms of our planning and risk assessment, we'll look at whether or not there's any impact on materiality, whether there's been any major changes in internal controls, if certain staff members may have been working remotely, does that change any internal controls for the organization, making sure we understand the financial reporting impacts and any risks on our audit strategy for the year. In terms of audit risks, the two presumed significant financial reporting risks that are under professional standards that we must consider are the presumed fraud risk from revenue recognition and also the fraud risk from management override of controls. In the prior year, we typically rebutted the fraud risk of revenue recognition because of the lower risk profile that we rated the engagement. In the current year, we don't plan to rebut that presumed fraud risk. So we're going to be doing additional testing over cutoff of revenues and testing deferred revenues in the current year. We've always looked at, and we're required to look at the presumed fraud risk from override by management of controls. So we'll continue to incorporate that into our audit strategy. We will test journal entries and use data analytic techniques to look at any unusual transactions that are recorded in your books, and we'll make sure we evaluate the business rationale of any of those transactions. In terms of annual inquiries, I'll move that to the closed meetings, to the closed meeting and talk about that with the directors. Other areas of focus, it's always an area of focus, is the landfill remediation liability in your financial statement, just because of the amount of assumptions that go into that calculation and the complexity of determining the present value of that liability. As I've talked about, I think, to the audit committee in the past, there's a new standard coming in play for 2023 around asset retirement obligations, which will change some of the calculations of how that liability is recorded in your financial statements going forward. But our audit approach will be to obtain an understanding of how you recognize and measure that liability for the current year. In terms of materiality, first of all, for the regional district, as I said off the top, in response to increased risk, we are reducing our benchmark. Typically, we have used 3% of revenues as our benchmark for our materiality. And our materiality is used to determine our plan and perform our audit and evaluate any effects of misstatements on the audit and any uncorrected misstatements on the financial statements. Along the way, we will reevaluate our materiality as we move through our audit, but we've used the prior year revenues right now to set our benchmark, which was about $35 million last year. Last year's materiality was $1,065,000. And in the current year, we're using 2% of the benchmark of revenues. We're using a materiality of $700,000. And our audit misstatement posting threshold is $35,000. Last year was $53,250. And what that really means is that in our audit findings, if we have any corrected or uncorrected misstatements in excess of the $35,000, we report that to the audit committee. If there are amounts that are uncorrected or corrected below that threshold, we are not required to report that to the audit committee. Similarly, for the hospital district, we have reduced our materiality from 1.2 million to 1 million and reduced our percentage of benchmark, which was in the case of the hospital district, we use total expenses. Last year's total expenses were just over $62 million, and our materiality was 1.2 million. In the current year, we've set our materiality at $1 million. Again, we'll reevaluate that as we get the current year results and determine any potential changes to our materiality figures and report that to the audit committee and our findings. Next page just talks about audit quality. I just want to highlight that what our systems are for our internal control systems for making sure we're delivering quality audit in terms of making sure we're independent and objective. Assessing risks is an important way that we deliver a quality product, as well as making sure that we have the appropriate teams and have the appropriate expertise and knowledge in delivering our audit, and making sure we're associating with the right clients and the right engagements. In terms of our team on page 10, you'll notice a couple new faces to our team besides Debbie McKinnon, who's here with me as our senior manager on the audit, and who will be leading our team here and be on site managing the rest of our team. We've added Nancy Ady Mackay. She's an engagement quality review control partner, and she's out of our Vancouver office, and she's got many years of working in the public sector. So she'll provide some oversight on any significant matters and making sure that we've, any significant judgments that are made by the engagement team, and she will help review that and making sure that we're coming to the right conclusions in formulating our audit report. Two members of our forensic team will guide us in terms of any impacts, and that's Peter Armstrong and Marshall Wong, and they will review. Yes. Oh, sorry. They will review the forensic report and determine any additional audit procedures we'll be carrying out as a result of their review of the BDO report.
May I ask a question just at that point? I mean, the materiality here at 700,000 for TNRD, I mean, in terms of forensic audits and in-depth analysis of departments or those kinds of things, certainly historically, that's never been included in your audit. Your audit is, the 30,000 foot level audit and materiality of over $1 million. We haven't delved into some of the details that have come through on the BDO report. And if I understand it correctly, I think this is the third year of your contract with the TNRD, is it not?
I think this is our 5th year.
Was it a 5-year?
Yeah.
Sorry. Yeah, so this is the final year of that agreement. But in the past, we haven't done any kind of forensic work, and we have a fixed price agreement with you. So I'm just kind of asking the question: at what depths are you're certainly not going to go into the same depth level that BDO went to in their report. So what do you anticipate coming forward from the forensic side?
We have to assess whether there's been any impact on our audit reports from prior year mainly. So there could be, was there anything material that was found here in the report? My initial, initially looking at it, it doesn't appear to be. We also have to assess whether there's any, we got management representations around the financial statements, and was there anything else, any related party transactions that weren't disclosed? Some of those matters that the forensic team will, assess in terms of additional procedures we should carry out in the current year, or that relate to the prior year.
Yeah, makes sense. Yeah, thank you. Any other questions, comments? No. Please continue.
Okay, in terms of timing, key deliverables and milestones, we're in our planning phase right now for the 2021 audit. We're here today to present the audit planning report. We'll be starting our year-end field work in the next couple of weeks. In terms of, we'll come back with our audit findings and our delivery of our audit report on your financial statements in March or April. I've put that as the timing a little depend on any additional procedures that we're carrying out and the extent of those procedures and when we'll deliver our audit findings to the audit committee. Current developments, I'm not going to get into a lot of detail. You can see that on pages 12 to 14. We've spoke with many of these in prior audit committee meetings, and again, they're there for your reference. Again, probably the most significant is the asset retirement obligation standard, which will be 2023 for the TNRD. And then flipping a couple pages to page 15 in terms of our fees, you can see last year's fees for both the TNRD and the hospital district there. In the current, historically, the audit fees have gone up by some sort of inflation factor, and any significant changes in professional standards that may have caused us to do additional work. In the current year, because of the professional requirement to do increase our audit scope because of the increased risks around the organization, we will require to do additional work. At this point, we haven't assessed exactly what our fees will be for the current year, but as the audit progresses, we'll communicate that with management and the audit committee as to what our estimated fees will be.
Yeah, go ahead.
So the percentage increase I get, inflationary increase, but the scope to which your audit penetrates the organization based on the need for some forensic studies could be a bit of a slippery slope from my perspective in terms of the fee issue. So is there a general range that you're anticipating at this point?
Well, given we just got the report last week, we're still determining how much additional work we're going to have to do in the current year. But clearly, we've got additional team members and additional partner that, those are outside of what we've typically required on our engagement. So, and then we'll have to do additional testing and sampling that I've laid out here. So I don't have a good number at this point, but that's something that we'll clearly try to communicate as soon as possible.
Yeah, go ahead.
I guess the concern that I have is that, we had a report from the Kamloops This Week newspaper about a year ago, and that indicated that there was $520,000 worth of expenses that they were looking at. And we subsequently engaged BDO, and they spent about another $500,000 confirming the $520,000. I don't want to be spending another $500,000 to confirm what BDO said. It's becoming a bit of a train wreck. So what I would just wonder is that, you know, we initially thought that the BDO cost was going to be between 50 and 75,000. I think there was some degree of comfort there. I suspect less comfort now at the 500,000 number. I'm just concerned that you're not going there with this annual audit.
We are not going to the $500,000 level, I can assure you.
Thank you, Mr. Chair. Page 12 under public sector accounting standards, bullet under revenue bullet 2, the new standard establishes a single framework to categorize revenues to enhance consistency of revenue recognition and its measurement. As you know, we get most of our money from taxation, but then we are diligent in trying to scrounge whatever we can in grants. Is this saying this will all go into one pot? I just don't quite understand what that means.
No, where the standard will change is where you, mainly in things like services, where the TNRD has an obligation to provide a service for revenue it's earning. There'll be, you know, like a business license. There'll be different timings of when you recognize revenue, not so much around grants or taxation, but where you may have some obligations to perform under a fee you've received. You won't be able to recognize the revenue until you've actually performed that obligation.
I just don't like the idea of a big pot not being able to determine what goes where.
No, it won't be. And you'll continue to classify your different areas of revenue the same way you had. It's more around when you recognize and the timing of
okay, I just
revenue.
Quite understand that. Thank you very much.
If I may, I just follow up from Director Christian's comment. Please remind me, the present contract, the 5-year contract, had a set prices in it. That's my understanding. It's not a, I mean, it's changing year to year with inflation things, but there's a set price. Now you're talking that there'll be additional costs. I think it's very important that you outline those additional costs to us and what will be done for those additional costs prior to commencing any of those activities. I'm a little bit uncomfortable with all of a sudden we've gone from a firm price to, oh, there's some flexibility. I appreciate the BDO report has cast a different light on past audits and I guess in hindsight, probably the audit committee, we should have been delving perhaps under your contract in more depth into perhaps random departments and random operations of the TNRD from time to time. But that wasn't what we did in the past. It was really high level audit. And so I just would hope that you would bring us a proposal if there's going to be increased costs, what will be done under those costs, and that this committee then can review those costs before we engage.
I will promise to bring that back before we commence our field work.
Yeah.
At least a reasonable range. So that,
yeah. And then one other thing I was just going to mention, the audit involves both the TNRD operations and the hospital board, but it should be clear to everyone that a $62 million budget of the hospital board is not administered by the TNRD. Therefore, we have never gone into any of the in-depth accounting issues with the hospital board. We're just looking at the funds that the hospital board is providing to the hospital operation.
And that's why we haven't, like in terms of our materiality, modified our materiality on the same basis, because it's a different type of operation and the risks identified aren't the same as those identified with the TNRD.
Yeah, and the costs related are obviously much smaller too. Okay, anything else?
I think that was just the only other thing is Appendix 1 on page 17, just in terms of our required communication. So in terms of our report. We'll come back with our reports to the audit committee in terms of our findings with our audit. We'll confirm our independence to the audit committee. We've got certain professional requirements, which we'll run through today around your risk assessment and your oversight of those risks. Provide you copies of our engagement letter and the management representation letter, and communicate any significant control deficiencies that we will that we've identified during our audit. And that's our report. If there are any further questions, I'm happy to take them.
Yeah, thank you. Any questions, comments? Okay, Director Christian.
Thank you. If there was any emphasis I would place on the coming audit, it would be the impact of COVID-19 on the operations of the regional district, everywhere from health and safety implications to HR implications with relation to sick leave utilization, those kinds of things. And I suspect that would be illuminating for the organization.
Thank you for your comments.
Yeah, and just a follow up, I think this committee is, we have some set meeting dates, but we're available at almost any time. So should you need to come back to the committee, I think we'd be pleased to meet at your convenience.
Thank you.
And then we're moving on, item 4.2 on the agenda. The director's compensation, and this is an issue that was raised by Director Quinn. You wish to speak to that?
I'm trying to be a little proactive here. In the past, directors, particularly the rural directors who are from a long way away and in close, get an annual stipend. They also get an allowance based on the mileage that they travel. And several years ago, it was all rolled into one. So what's been happening is that everybody gets their stipends, but some of us are not attending, and so they're getting paid. Sorry. Thank you. They're getting paid as if they were here all the time. I'm just concerned that would give somebody a lever to start saying, you guys are at it again, or you're still at it. And how would we address it? I have no problem at all, and we'll have no problem up to the end of the emergency. But after that, I'm just wondering if we shouldn't go back to breaking it down to, you get a stipend, then you get your, I forget what we call it, something for the mileage, for the hours you spent on the road. And I'm not really sure how we do that. All rural directors are going to be mad, I can think that. But it's just, to me, it seems to be something that could cause a problem in the future. And I'd like to avoid that. And so I just wanted a brief discussion to how we approach that at the board. Thank you, Ken.
But this is really more a policy issue, I think, for TNRD than it is for KPMG. Perhaps Mr. Ray, you could explain that the stipends are adjusted to include a portion of travel time to these meetings. Is that for both rural, or just for rural directors, or for both rural and city directors?
Sure, Chair Rain, thank you very much, and I'm happy to speak to the matter. So yeah, it is for all the directors in the board. As you know, in the remuneration bylaw, we calculate an annual indemnity that each of the directors gets. And it's always a different number for each director if they live in different areas. Kamloops directors all get the same amount because they all live in Kamloops. But the difference arises from that travel indemnity that you're referring to. So when we build up that indemnity, there's a base indemnity for rural directors and a different base indemnity for municipal directors. And then to that, there's a meeting indemnity where there's an assumed number of meetings that each director is going to attend. And so there's a component for the time for that meeting. and then there's the travel component for the travel time. And prior to 2020, all the directors always attended all the meetings in person. If they weren't attending the meeting, they weren't attending at all. And if an alternate came, as an example, instead, we would claw back that money from that annual indemnity so that the regular director wasn't being paid for the meeting they didn't attend, and the alternate director would receive that amount instead. With 2020 and the onset of COVID, we quickly had to pivot to doing more virtual meetings held by Zoom. And that's continued into 2021. We finally were back into our own boardroom here, which still requires some directors to attend virtually. And at the outset of that, this wasn't really looked at in depth because, frankly, we just wanted to encourage directors to attend virtually to make sure we were doing everything from a proper health and safety position of proper social distancing. But where this looks like it's more of a continuing thing, I wanted to address it in the remuneration bylaw to make it more appropriate. If directors are going to continue to attend meetings virtually, they're still attending the meeting and they still get paid to attend the meeting, but I think they're not incurring that travel time. And so rather than having it, essentially what's happened in the past is that assumed number of meetings and the travel to attend those meetings was all built into the annual indemnity. It's paid every 2 weeks and averaged out over the year. Yeah. Sure. Yeah. Exactly. It depends on the distance they're driving. So it's less a percentage. It's a dollar rate per 10 kilometers. So it varies from the travel component varies from, let's see, one of them is getting $560 a year, and it goes up to about $2,800. So what I propose would be, yeah, somewhere. Well, I mean, it's quite a range. 560 on a what would otherwise be a $2,500 or $25,000 stipend, or 2,800 on a $15,000 stipend. Like, it's not as easy as a percentage.
Yeah, thank you. I just wanted to kind of get a handle on, is this 50% of the stipend?
It's
or
not.
It's really a minor amount.
Really, all I'm proposing is that we separate it from the annual indemnity and make it, as Director Quinn alluded to, something that would be claimed when directors attend the meeting in person. So if they're attending the meeting via Zoom, they don't get the travel time that they're not incurring paid for. But if they're attending in person, they can claim that, and they would. So if they still attended all meetings in person, they really wouldn't have any kind of change. It would be more timing.
And you have a proposal that you're prepared to bring to the board?
Yes. So February 25th, there's a committee of the whole. We'll be talking about property taxes and an update to the board on the impact of property assessments. The remuneration bylaw is also on the agenda for that day to bring some of these proposals to the board and get feedback prior to bringing a finalized bylaw to the board in March.
Yeah, but and it will be as per the principles that you've outlined here, that there will be two separate. If you attend in person, then they would get an additional portion for that attendance.
Yeah, exactly. We're really saying, rather than having it built into an annualized amount, it'll be tied more to whether you're actually attending the meeting in person or not.
Yeah, Director Quinn, are you comfortable with that?
Yeah, I just wanted a brief discussion on it because I think it has a potential to cause some problems a little later on. And I'm just trying to be proactive as part of the new TNRD. Thank you.
But I think it's reasonable that obviously our bylaws didn't anticipate.
No, they
COVID
didn't anticipate COVID.
And I think at the time we approved those bylaws, most of us didn't know what Zoom was. Now we know, now we understand, so we'll adjust.
I still don't have any connectivity that makes it work. Thank you.
Thank you. Then we're going to move on Chief Financial Officer, going to give us just a short report on the response to the BDO forensic audit report and recommendations that directly would relate to the audit committee.
Thank you again, Chair. So I'm not going through the report in detail, just highlights of the recommendations as you say, as it pertains to the audit committee. One of the key things being looked at is to expand the scope of what's currently the audit committee into a more in-depth finance committee that would be tasked with a more detailed financial review and oversight periodically. That's a recommendation I wholeheartedly endorse. So that'll have to be looked at in terms of reference for the committee, and making sure that we've all agree on what that should look like. There's also some discussion around creating an internal audit function that would report to the audit committee. That's being looked at as well. It's another recommendation. All the recommendations I endorse for sure, but that one in particular I think is certainly going to be a good investment in the future. There's a few different options to look at there. One, in fact, they kind of outline them in the report. We could either hire a staff member to do those internal audit procedures, or we could hire an external consultant to come in and do them, much like we do our external audit work on the annual financial statements. There's a few pros and cons on both. And one of the other things that's being looked at too is whether it could be a shared resource where not just the TNRD has the internal audit function, but perhaps it would be a shared resource that some of the member municipalities might also make use of, and cost share on it. So that's all being looked at, and we'll be bringing recommendations forward at a future date. The last thing I was going to mention is in terms of more detailed reporting to the board as a whole on expenses of the board themselves and management, which is something we've been looking into even before the BDO report was released. And so I've got some sample reports if anyone wanted to have a look, but there's essentially a couple of reports. One that's an employee expense report that summarizes the expenses claimed, by name for it's both the board and employees. So I was having a look at what some of the other regional districts provide as reports, and some of them have been providing on a quarterly basis a summary report of that nature. The ones I've seen have been just board members, but my recommendation would be to include board members and management. And that would be something that we could make public and post on our website, things of that nature, so that there's enhanced transparency and accountability around that. And then there's a separate one that is a check register summary that basically I could produce on a monthly basis that would just be a summary report of what we paid to each vendor during that month. And so it would be fairly high level, similar to what we get in the SOFI reports, but it would be provided on a monthly basis rather than only annually, and basically just list who we've made payments to that month. And that likewise could be made public and enhance transparency and enable better oversight. So that's really all I wanted to bring forward and see if there's any other questions or discussions that we can take into account.
Thank you. Director Gillis.
Thank you, Chair Rain. You mentioned the check report. Is that the one that I review periodically? And if I understand you correctly, you're suggesting that rather than have that just go to the chair, it should be to all members of the board. Is that correct?
It's similar. The list you're seeing is as we do each check run. It's a listing for that check run. This would essentially be the same information but presented just for the month. So more by the period as opposed to broken down by the individual check runs that we produce, but same information.
And to the entire board.
Yeah.
Yeah, perhaps we could have some discussion on the first item, Audit Finance Committee. I think Director Christian and Quinn will remember, I think at one of the very first meetings, I did suggest that perhaps the Audit Committee should be doing more work than just overseeing the auditor's report. And at that time, the CAO said absolutely not. That was not how regional districts operate. Obviously, if you set up an audit and finance committee, that's a much, much broader issue than you're looking at budgets and future forecasts. And that the TNRD has relied on staff to this point. It's just some discussion. Is that worthwhile? Is that meaningful? Should we be looking at something like that? Director Christian.
Yeah, and thank you for that preamble, Chair Rain. I agree with the notion of a finance and audit committee. I think that's consistent with other public bodies. I think that there would be a bit more work, and I would suggest that happy band of three might want to be expanded. And I do note that they suggested where possible, and if you had the availability of a CPA as an elected member of your board, you would likely use that person to the Finance and Audit Committee. I guess the only concern I have is that finance and audit are separate functions, so that you need to have that clear authority for the audit side of that committee to be quite enshrined within the terms of reference, so that that was a very clear and statutory function. I also think that that would support the finance department. And, you know, I know I've talked to Mr. Ray before about the challenges in terms of the number of staff and the amount of work in the finance department. But I would support augmenting the finance department, but not with an internal auditor. I think that would be a bit of a overstep in terms of an organization of this size. I think more staff actually doing the busy work of the finance department, I think would help, and that the audit function clearly falls to our external auditor. And even at say $30,000, it's going to be much cheaper than the hiring of an internal auditor for the TNRD. So, you know, I think we need to react to the forensic audit, but I caution that we don't overreact. And to that end, I think Mr. Ray's ideas about, you know, the routine disclosure of expenses by board members is perhaps titillating, but I think it's covered in the SOFI report. We are required to issue a SOFI report every year that talks about the amount that we make in terms of our honorarium, the amount that we make in terms of expenses, and that can be broken down by mileage expenses and meal expenses and everything else. But I don't know that there's a lot of value in the long term of doing that on a bi-weekly basis or a check run basis and releasing that, because I suspect would be somewhat arduous. But nonetheless, in the short term, I can certainly see that. And I think the biggest and overriding recommendation from the forensic audit is that the responsibility rests with the board, and that the board needs to look at their policies and make changes, you know, related to those that reflects a higher degree of accountability for the public. And I take that recommendation very seriously. I think the advent of a policy committee is a good first step. And I think if the policy committee could start to look at terms of reference, and if they looked at finance and audit and what that might look like, I think that would be a good next step. And I would see the opportunity to augment the finance department with, as I said, more people that are actually doing the daily work of the finance department would be a good third step. And maybe in the short term, we have more disclosure about expenses, but I don't see that as being a long-term solution.
Thank you, Director Quinn. Any comments?
I'm not so sure whether I'm not sure how you would go about doing it. As far as our expenses go with directors, there's no problem. It should be transparent if we can make it. But I don't want to be supervising Debbie or any of the staff in there. That's the department's thing. And I'm not quite sure how a finance committee would fit.
Yeah.
If it's a good idea, the board will handle it. But I just am not clear on how it would help out.
Well, it would be a ton of work. And you know, I know certainly at municipal level, you know, we have an audit and finance committee. Quarterly, we look at it. It's the audit and finance committee that brings forward the proposed budget to the rest of council, and then council debate, you know, how and how much we're going to increase budget, where we're increasing, and those kinds of things. But it is screened by a finance committee. But at the TNRD level, that would be a ton of work. I mean, the audit and finance committee would be not meeting twice a year, 3 times a year. You'd be meeting, I would suggest 7 or 8 times a year for sure. You'd have to have an expanded. But my thought was maybe Mr. Ray could look at what are other regional districts doing, and it's a comment.
Chairine, I was just going to say I could comment on that if you'd like, because as part of the policy review committee work we did look at a number of committees that other regional districts have in place. And we're actually undertaking that exercise again, because we plan to bring a report of all of our committees, like a review of all TNRD committees to the committee of the whole in April. So we do have some information on what other regional districts have in terms of their audit committees. Most of them, I would say the majority of them have not just an audit committee function, they have an audit, maybe audit and finance, or finance and governance. So it is quite common to have a committee that's that goes beyond just the audit scope.
I would have thought so. That would be helpful, because obviously we don't need to reinvent the wheel here. We should be looking at what other regional districts are doing and get the pros and cons, and in discussions with them, I'm sure they would say, hey, if we were doing it over again, we'd do this. And here's a mistake we made. We got into too much detail here. So the scope of work could be maybe narrowed down to where it could be time effective for members of that committee. Go ahead.
Thank you, Chair. Yeah, I guess I envision it as a good middle ground, in that it's difficult to have an in-depth update of the board as a whole on finances that isn't at a high level. You know, once it starts getting too detailed, it takes up too much time for a regular board meeting. So a dedicated finance committee could have a more in-depth look at financial reports, not to direct operations of staff necessarily, but for that oversight role of being able to receive the information, consider questions, and get those asked and answered, rather than trying to bring the whole board into that process.
Yeah. Go ahead.
Thank you, Chair Rain. I just wanted to make a few comments, if I may, with respect to Director Christian's comments about kind of the structure. And that's something that Mr. Ray and I have been talking about here this last few weeks. And if you look at our finance department right now, we've got one manager and he's sitting right here. And other than that, we've got a supervisor, and the rest are, you know, front line employees. And it doesn't work from a succession standpoint. And it obviously hasn't worked for us with respect to just the oversight that we need. So the one idea that we talked about was, unfortunately, we had a resignation in that department here just recently at one of the higher level employees. And we immediately posted it, but after kind of reflecting on that, we thought it might make more sense now to bring in more of a deputy role or an exempt role that would be kind of a support position and a succession plan for Mr. Ray. and of course, still backfill that one, but really take a look at what our needs are. But it would allow us to really build some capacity and tackle some of these recommendations in a more, in a way that's much more effective. So we're certainly looking at that. That would have to go to the board, but wanted to bring that up here today for your comments.
And then speaking about how it goes to the board, I would like to, if the policy committee is reviewing what's happening in other regional districts, I'd like to think that obviously a report would come to the board. It would be nice if maybe the report could come to audit committee so we could see it slightly ahead of time and maybe even make a recommendation based on what's coming from the policy committee. But I do think that's what the board has to see. The board has to see, here are some options. Here's what's going on in most regional districts. Here are the functions of an audit and finance committee. And here's what we're proposing. And then a decision can be made. Everybody's comfortable with that? Yeah, then the other, I would make some comments about recommendations on the video on the internal auditor. I certainly agree with Director Christian. I think hiring an internal audit person would not be as cost effective. In fact, I think there's another option from what you suggested, and that would be that the role with the external auditors change so that you say, hey, there's going to be an in-depth analysis of 1 year cash that might be coming in, and another year it's planning department, another year it's building inspection, and those kinds of things, so that 1 year the director's expenditures, so that there's more in-depth, but that would change obviously the costs of the audit substantially, but it would seem to me that you're going to be more cost effective if you use an external auditor who knows your operation from the high level and then can get into various departments and do a detailed in-depth audit. They're looking for any lower level amounts of mis-expenditures or expenditures outside of policy. To me, that would be more cost effective. And I don't know, perhaps our auditors have a comment. Do you do that in many of your audits?
I think that my comment would be around that. It makes sense on a project by project basis, something like that, to probably engage a third party to carry out that sort of an internal audit function, just because I think the size of the organization might be that it would be difficult to employ an internal audit department, and what happens if you get turnover, and it would probably be easier to engage a third party to do that. In terms of it being your external auditor, you have to the external auditor would have to consider whether there'd be any, depending on the type of work that you and the scope of it that you might want to carry out. You'd have the external auditor would have to consider whether there's any impact on their independence in issuing their financial statement audit report. That would be the consideration that depending on the type of the scope of the work and the type of services that you're asking to the third party to look into.
I guess my thought is, and we can see if it does make sense. If you're doing an audit and you know all of the functions at a high level, it certainly would be easy for the auditors then to go in and analyze in depth a department or an operation of the TNRD. More cost effective than bringing somebody from the outside who doesn't understand as well all of the operations. But maybe it's in my mind only.
No, I would agree that in most cases, I think your external auditor could do it. It just depends on the type of internal audit services, because you could get into different areas where potentially as external auditors, we can't be auditing our own work. So depending on the type of internal audit work that was being carried out.